Hi, Brian, your mortgage insider with your weekly update on the mortgage market. Pretty stable and easygoing this week. The 10-year Treasury that does track the general direction on mortgage rates is up a little bit today, 6 basis points, just over 3%. If we look at this chart, 3% has been identified as a line that has been hard to cross, and once it's crossed either below or above, it can have some challenges. So this is, they call it a Fibonacci retracement level, and then it happens to be right in the same line with 50-day average, the 25-day average, and so currently we are below the 25-day average and below the 50-day average, just peaking above it right now. So these are really just designed to be computer generated, lines in the sand, so to speak, for traders. And this really tells us nothing about the interest rate direction. We're just steady as she goes. But the most interesting thing about all the happenings in the mortgage world right now and in finance when it comes to the 10-year Treasury, the 1-year Treasury, and the 2-year Treasury, these remain inverted, meaning that you get a higher rate of return to have your money guaranteed by the federal government in an investment in, say, a U.S. Treasury bond for 1 year or 2 years at 3.1, 3.2% versus 10 years at 3%. All this really tells us is that long term, the outlook is not that great for the economy and for inflation. Quite frankly, it shows that 3% on average is the rate of return. So if inflation comes in significantly higher than that, then your large investment of tens of billions of dollars that might be invested in something like a U.S. Treasury bond is going to be worth less than the dollar because of inflation, that's going to take place over that 10 years time. Typically, we would see this 10-year rising pretty significantly if that was the fear or if that was what those investors were looking at. Instead, we're seeing an inverted yield curve, which typically flags that there's a recession near. So that's our update this week. Make it a great one.